Hi guys, November 2025 has become a real trial for crypto investors. Bitcoin crashed from its all-time high of $126,200 reached on October 6th down to $82,000, a drop of nearly 35%. This is the worst monthly decline since June 2022. When the market experienced the FTX collapse. Let's break it down, guys. It all started on October 10th when the US president announced 100% tariffs on Chinese goods. Markets reacted instantly. $19 billion in positions were liquidated in a single day. Cryptocurrencies are behaving like classic risk assets, and when traditional markets fall, crypto falls with them. The S&P 500 and Nasdaq dropped 1.6% and 2%. CoinGlass called this the largest liquidation event in crypto history. By February, Trump added 25% tariffs on goods from Canada and Mexico. Investors are scared trade wars could push the economy into recession. But here's what really crushed the market: massive exodus from Bitcoin ETFs. November broke all negative records with $3.79 billion in outflows. The largest fund, BlackRock's iShares Bitcoin Trust, lost a record $523 million in one day on November 18th. BlackRock alone accounted for $2.1 billion in outflows, visual representation of the bleeding from ETF funds. Here's why this is critical. When investors withdraw money from ETFs, managing companies are obliged to sell real Bitcoins. This creates enormous selling pressure, triggering a cascade of liquidations. The average entry price for Bitcoin ETFs is around $89,600, meaning most institutional investors are currently underwater. Add to this the Federal Reserve's hawkish stance. The market hoped for rate cuts in December, but the Fed remains tough. October unemployment data was shocking: 153,000 job cuts, 183% more than September. High rates plus recession risks equals a toxic combination for crypto. Short-term holders are panicking and dumping coins. At least 31,000 BTC transferred to exchanges for selling. But whales are accumulating at the fastest pace in 4 months. The number of wallets with 1,000 plus BTC is growing rapidly. Smart money is buying on fear. Saylor believes the correction clears out the tourists, the leverage, and the weak holders, and sets the base for the next rally upwards. Technically, Bitcoin formed a death cross, but historically, after the signal, BTC recovered within 2 to 3 months. The critical level is $93,900. Hold above, there is a chance for a bounce. Break below opened the path to $75,000 to $80,000. But many experts believe in the Santa Claus rally, the traditional December rally. IT consultant Roman Nekrasov believes that if liquidity returns and ETF inflows recover, BTC could bounce back to the $112,000 to $118,000 range by year end, with growth to $130,000 to $140,000 in the first half of 2026. Fidelity, Galaxy, and CryptoQuant analysts agree. This is a correction, not the start of a bear market. If you are a trader, be careful with leverage. Volatility is insane right now, and $2 billion in liquidations per day is no joke, guys. Trade by levels. $93,900 is support, $100,300 is resistance. If you are holding long, this could be a chance. Historically, Bitcoin has always recovered after 30% drawdowns. The same happened in August 2024 and similarly in April 2025. DCA at these levels worked for everyone who held longer than a year. November 2025 will go down in history as one of the toughest months for crypto. But remember, fundamentally, Bitcoin is strong. The halving has occurred, institutions are still here, and the limited supply of 21 million isn't going anywhere. The next 2 weeks will show whether a real bear market has started or this is just a healthy correction before a new growth phase. Stay sharp, guys, manage your risk, and remember, this is crypto, baby.